guys, it's Doc's Market Minute for Tuesday, September 1st. Just a quick video today. There's about an hour and a half to go before the cash market opens at 9:30 Eastern, and what we're seeing so far is a pretty healthy dip caused by, guess what, China again. So what I had talked about last week was when we got that nasty move over 200 points to the downside, I felt that there was three different patterns that would emerge from this. One of them being a V-bottom, similar to what we've seen already before about this time a year ago, last October, from almost a 10% correction, and actually it was 10% to the tick in the S&P futures last year. We had a very, very strong rebound rally from that point, all right? And that was one of these V-bottoms that we've been seeing for the past couple of years. You can see this here. So after a pretty healthy correction, we had an even stronger rebound. And that was kind of the pattern that we saw for those 2 years, in 2013 and 2014, is that we saw the rallies from the bottom be actually stronger than the actual distribution that got them there. Very, very unusual price behavior. And this is really the only time in history I've ever seen that type of price movement. Okay, so that was one of the possibilities, but I think as of this morning, based on the way that the price is acting, I don't think that we're going to get that V-bottom. None of the prior V-bottoms ever showed much distribution during the middle of the move at all. So what I feel is that this is now shadowing the fact that we're probably going to get a very noisy, very volatile consolidation period in here, similar to what we saw in 2011 and during 2008. Let me qualify that. The early part of 2008, okay? So scenarios number 2 and 3 is that we're going to have a noisy, wide consolidation pattern, more than likely retesting or even undercutting the lows from last Monday, okay? And that's going to scare a lot of people, but I believe there's an upside to that eventually. Eventually, usually when we undercut something like that, this is where you get the true capitulation. This is where people finally say, to hell with this, I can't take this market any longer, and they bail out. This is where the institutional bulls will step in, and we'll get some type of strong rally from there. Now, after that initial move and that consolidation pattern like this that goes on for a while, maybe an undercut, okay? Maybe even more than an undercut. Eventually, we'll see some type of relief rally from there, and this is where the delineation comes between patterns number 2 and number 3. Pattern 2 is that we'll, at some point here, we'll have a higher low, and then it'll recover into a higher high, and this will probably lead us into 2016 by the time that this occurs. Okay, so that's scenario number 2. Scenario number 3 is what happens here is that this leads to a lower high, and then we sell off, and this is going to be very similar to what we saw back around the June time frame of 2008. So we do have some history on our side through these things. The reason why the patterns repeat is because of human nature. So I don't care how many bots or HFTs or algorithms that you throw at these things, they all run off of human nature. Now, just in the short term, what we can do is we can use the fibs for this. Again, you can see how from the initial, this is the ES now, this is the S&P futures, this is not the cash index. So we have a little bit more movement here on the futures versus the cash movement because of the fact that these trade almost 24 hours a day. So last Monday we were actually down about 100 points, and we had recovered somewhat of that by the time that the cash market opened. So what we can do here is we can do kind of the same thing to this bounce back up that we've seen. We can start this move from down here and take it up to the top here, and then we can see that this move right now is coming down to about a 50% retracement of the bounce back up. So when you see energy like this, this is very similar to what happens for those of you that drove in the wintertime, right, or drive in the wintertime. Sometimes you'll go around the corner, and what you'll see is the back end will kick out. Will move in this direction because it applies the same vector as where you were coming from again. And so you have to correct from that, and then what ends up happening is you'll fishtail back and forth until you finally recover and achieve that. So this is very similar to what we could be seeing, is that the initial burst of energy comes in, comes back up again, and then we see kind of a damped wave coming from this. So this is very, very common to see something like this. So with this, almost this concept of like a dog grabbing a chew toy and flipping it back and forth again until finally the energy comes out of here. So look for something, very wide consolidation on here. It's going to be difficult to trade for the next few weeks until we do get some sense of the range behind this and the limits of this pattern. Okay guys, that is it for today's report. Thanks for listening, and we'll see you tomorrow.